Hello and welcome everybody to our daily live trading webinar. We call it Real-Time Daily Trading Ideas. 5 days, 5 traders. We would like to create some trading ideas, show you some interesting trading ideas and, for example, some trading setups. But before, here's some additional information, our risk disclaimer. Be aware that Forex and CFD products are with leverage, so they can result in losses that exceed your deposit. They may be not subtitled for everyone. Be aware that all what we are showing here today just in a personal opinion and not an advice for investing. Yeah, but here are the good news. Christmas is coming early with Admiral Markets. We have some special promotion around Christmas, so for more details, check out our website. As I said to the beginning, 5 days, 5 traders. Today is Monday. Today with Jay. So later more about Jay and his trading style. Here you can see some special offering. For example, our bestseller DAX 30 with a typical spread of 0.8 points during the main trading hours. If you have some question, feel free to contact us. Here you can see our telephone number and our email. You can check also our YouTube channel. Later we are uploaded all our live trading webinars there. So I say hello to you, Jay. I hope you can hear me. The sound as well.
Good morning, mate. All is good. I hope you're doing well.
Yeah, all is fine. Your sound is very good too, so you have the screen. You can start with your trading ideas.
So you can hear me and you can see my picture. Excellent. Good morning to you all. I hope you're doing extremely well. Last week I was off because I was given a seminar, and I do need to hurry up a little bit today because I'm meeting a guy from BlackRock and a portfolio manager from Allianz Global Investors for lunch. And I'm really interested to see what BlackRock is rolling out in terms of ETFs next year, because their flows into passive funds is quite important also for our trades. Goldman did a research piece last year that exchange traded funds based on currencies are actually a leading indicator for where a currency can move. So quite interesting. Last trade was obviously a couple of weeks ago. We traded EURCAD, and the idea was that at the time the Jamaica coalition talks broke down, there was some uncertainty. The markets hates uncertainty. And then Canadian dollar, we had an expectation for positive retail sales on Thursday. We looked for top edges to be sold, and we kept an eye on the yield spreads and oil prices. This is how we left Monday morning for the weekly briefing. And then as you can see, the trade actually started working in our favor. And then we didn't quite get the target, but to the guys who spent the Saturday, Sunday, Monday with me last week, they know exactly what this is. And this actually means an accumulation, and we need to go long. So hopefully if any one of you took the trade, hopefully you didn't take the trade. Why? Because it was my trade. You need to do your own work. So let's go through the work of this week. Picture this morning, we saw last week strength in the cable, in the pound, but it came off a little bit. We did see a risk tone that was risk on, meaning money was seeking high yielding assets. For example, equities. Equities rallied significantly on the back of the very positive US tax Senate bill passing, and now we're going to have to see how that tax implementation is going to go forward. Please also keep in mind that towards the end of the year, without an increase in the debt ceiling, the US will be going towards bankruptcy. So they're currently also working on a workaround towards that, so that everything will stay in business. This morning, very sideways action. Why? Because it's Monday. Monday is construction day. Big boys are positioning themselves according to the financial data. So what is the financial data? The Fed this week, we're going to have Friday non-farm payrolls. It's expected to slow down a little bit. Average hourly earnings are expected to slow down a little bit. And my colleagues have already in the big banks and funds started selling the US dollar. There was some weakness overnight in Asia. Unemployment claims are still at an all-time low, though. That's a leading indicator for you guys. And confidence in the labor market is at multi-decade highs. So what's missing is wage growth. That's still limited. And so we heard a lot of talking heads out of the FOMC and the Fed stating their concerns that inflation is still yet not picking up. Keep an eye on the very long yields in the US for the so-called inflation expectations. If commodities keep rising, inflation expectations were to pick up, then we could finally see a steepener in the curve. The 2-10s in the US is still flattening. US political headline risk this week. Former US Defense Director Flynn is willing to testify against Trump in regards to the Russia probe. That's quite negative, actually. And we did see some massive sell-off in risk assets last week on that headline. But then the tax bill came around and all was well again. Bank of Canada this week, Wednesday, we have the interest rate decision, but the market is expecting the bank to leave rates at 1%. So there's a tiny, tiny chance. 3 out of 32 analysts surveyed by Bloomberg see a small chance for a 25 basis point hike. GDP growth moderated in the third quarter, and we see that the Bank of Canada stressed significantly several times via speeches that they're data dependent. So they wanted to gauge consumers' reaction to the recent couple of rate hikes that they proceeded with. Their focus is on wage growth, and that has actually improved, the highest level since April in 16. So these guys are the only one out of the G8 where they actually have wages increasing. So we did see on Friday some very strong employment change numbers, and I actually picked these out so you can see these real quick together with me. We'll scroll down to Friday because the picture says more than 1,000 words. Canadian dollar employment change. Expected was 10.2. It came in with 79.5. So I'm expecting that strength to continue for a tiny little bit longer, okay? So we'll see towards that. And where am I? The overnight index swaps are pricing in Friday at the close of business a 57.2% probability of a 25 basis point hike in January, so not in December, in January, and a 91% probability that by the end of March of next year, they will have hiked one more time. So they are in a hiking cycle. They were a little surprised that once they hiked twice, the data started coming in weak. So they stepped off the gas. They didn't hit the brakes. They just stepped off the gas. And now we're seeing some strong numbers. So on Wednesday, and when Canadian economic numbers are coming out this coming week, we might have some opportunity to make some pips due to volatility. Bank of England. It's all about sentiment, and sentiment is heavily influenced by the sound bites coming out of the Brexit progress. Today, Prime Minister May is meeting Juncker and Barnier, and they're going to gauge if this financial settlement that the pound had risen on all through last week. There was an overnight headline piece by UK Rainbow Press stating that they had agreed on 50 billion. And then all day long, we had people coming out of the EU and the UK government stating, no, we're not done yet on that agreement. The market said, hey, we don't care. That's done and dusted. And accordingly, the pound started rising until profit taking towards the end of the week. In the background, there's still this looming question regarding the Irish border. So that is also what we call headline risk. We need to be aware of that. That could still cause some problems. Tuesday, we have services PMI. Guys, for my traders, PMI, yeah, the most important indicator that we follow, it's expected to moderate towards 55 from 55.6 last. Moderation is still expansion. Anything above 50 is expansion, so we're just expanding a little bit slower. That's fine. The last report saw the fastest pace in 6 months. We also saw in the last report improved order book. That is new orders is a leading indicator to this PMI itself. We had some resilient client demand, improved domestic demand, and we had several new product launches. So amazing. To the detriment of the Rainbow Press, the economy is still doing pretty well over there. Okay, and last but not least, we have Friday, October's production numbers. Please recall this is a coincident indicator. It merely confirms or denies our PMI views. And there we have an uptick on the year-on-year, which is expected, and a decline on the month-on-month. And why are we having keeping half an eye on it? I mean, Friday is square up day anyways, but we're looking at it because that actually flows into the Q4 models. And we want to see how has the Q4 in terms of GDP growth within our respective economies started. Okay, remember the game is he who predicts GDP the best makes the most money. RBA, Tuesday, we have Chinese Caixin Services PMI. What is Australia? It's a suburb of China. So PMI numbers out of China will actually have an influence on the Aussie dollar, and it actually may confirm that the economy had a relatively weak start to the fourth quarter. Tuesday, we have monetary policy decision out of the RBA. Here again, the market expects the rates to be left at 1.5%. Which one is the highest yielding out of the G8? I hope you all know it by now. It's New Zealand, 1.75. And the runner-up is Australia with 1.5. Focus will be on the tone regarding household consumption. That's what the RBA is keeping an eye on. So weak third quarter wages cause concerns in regards to inflation expectations. Key major word, I keep repeating that every single morning meeting. The market trades 6 to 18 months future scenarios. And if something changes today, which actually adapts the probability of the most highly priced in scenario to change, then the big boys on the buy side need to make adjustments to their positioning accordingly. That is the second name of our game. So we still have spare capacity in the jobs market. And so this whole meeting may have a dovish tone to it. Dovish means low yields, means Forex chases yields, means potential pressure on the Aussie dollar to come off. Come off means fall in price. Retail sales data expected at 0.3 versus flat last time. Soft wages but strong employment growth yield expectation for a rebound here. That, if this comes a lot better, again, volatility expected, and we can make some pips. Wednesday, the most important data piece out of Australia. Third quarter GDP. Consensus expectations for 0.7, last time was 0.8. Domestic demand could prove to be modest. Aha. So it's always very difficult to start giving you guys a trade on a Monday morning, but we're utilizing all professional tools available. So let's have a look at the Commitment of Traders report. Let's hack in 2-year history range, keep a clear view on what the dealers are doing, and we see, aha, dealers in the euro are extreme short, so watch for top edges to be sold in the euro. Swissy dealer significantly long, not extreme, but significantly long. Aha. Pound dealer significantly short, so watch for top edges in pound pairs to sell. Yen dealer coming off the long a bit. They were really long, and last week we saw some really good inflows into the yen. Had nothing to do with risk off. It was actually due to foreign money coming back into Japan, buying equities there. Because if you have a look at the Japan index, Nikkei 225, for example, it just broke multi-year highs and it's accepting higher prices, which yields us a higher probability that prices continue to rise. And on the New Zealand dollar, we have an extreme long out of the dealer positioning. So if the dealers are long, who's short? It's the buy side. So here again, watch for potential bottom edges to be bought. Volatility, euro 7.23, that's still rising. Pound is rising, yen is rising, and the VIX was rising. It went all the way above 14, but with all the European pension funds selling volatility, I'm super eager to speak to my buddy this lunch break today about that. That is just completely insane. The ECB has succeeded in suppressing sovereign yields, which European pension funds buy. Okay, 10-year Germany yielding you less than 0.4%. That's insane. So what are these guys doing? They're buying investment banking products where they are sellers of volatility. That's going to bite them in the butt one day, but not today. Risk reversals are showing us a euro-yen long for Monday. So if you want to have a look at that, that is, look, that trade hasn't performed yet. I'm looking at strength versus weakness. Canadian dollar is the strongest and pound is the weakest in the London session so far. What's my potential trade this week? Long Canadian dollar versus yen. Why? Canadian dollar, as we looked at, had strong numbers on Friday. Trade balance is expected to come in positive this week, and we have the rate decision, which is expected to be left at unchanged 1% in terms of rates. Yen, I'm expecting a risk on tone for this week. The put-call ratio is bearish for today, and the commitment of trader support is actually against a short in yen. It's speaking more in terms of long yen. Nevertheless, I looked at the chart, it looks okay. My trade structure, I would like to buy bottom edges. I'm keeping an eye on oil, which looks currently a bit heavy. We are at 57.77 in WTI, right at fair value, so nothing to do in oil at the moment. Okay, if you look at the trade, so we had these really positive numbers. We had reaccumulation. This is what we call the role reversal. The market started rising, and I would put on a startup position at this former fair value here, and then second half of my position right at the role reversal towards the 50% retracement of this momentum move. And I'm expecting what we call a squeeze into the top edge here, which is coincidentally today R2, but it's coming from the left-hand side. If you want to look at it at a live chart, so these pink lines, these are support and resistances that are coming from the past. This is my top edge. I'm expecting the squeeze. And as always, this beast is not giving me an entry right away, so I might have to third it and buy a startup position right now, because we're approaching new highs, and these, you know what to do on the back of that. Let me have a time check. I hope I did okay. 17 minutes 38. Wow, I think that's the fastest weekly meeting we did so far. So yes, this trade is valid. Also, euro yen, have a look at that. Also, keep an eye on the risk events that we talked about. If they come with a larger deviation, we'll expect volatility. But do me a favor, start trading like the big boys. Buy cheap or sell expensive, okay? Nothing to do where fair value is. I hope you're doing well. Have a great week, and I will catch you all next week. Thank you for your time. I really appreciate you coming in on a Monday morning to listen to me blabbling on. Guys, trade smart, live free, and thanks to Admiral, and I'll catch you guys next week. Bye-bye.
Great, thanks a lot, Jay, for your analytics and your fundamental data you are showing here us today, and some interesting trading setups. So thanks for the listeners today. So tomorrow more about new trading ideas with Admiral Markets. Enjoy and take care, everybody. See you soon. Bye.